day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about the top 10 stock market rules that you want to stick to. You stick to these top 10 stock market rules, and I will tell you the chances you will do very well in the stock market are very high. You go away from these rules, and I think it's going to be a very dangerous place for you out there, guys. These are my top 10 rules for the stock market, for stock market investing. I hope you guys absolutely enjoy this today. If you're kind of newer to the stock market, make sure after this video is over, you check out that first link there in the description. That goes into my 11-part series on how I invest in the stock market, how I actually pick stocks and whatnot. So that course should be absolutely phenomenal for you guys. Let's get into this, guys. At number 10, yesterday doesn't matter. Yesterday doesn't matter. This is a very important one, even though it's number 10 here. Yesterday doesn't matter. Whatever you invested in, in the past, whatever gains you got, whatever losses you took, this stuff just doesn't matter. You just got to forget about that. You got to move on, because if you did great, it's all about your next investment at the end of the day. If you did bad, it's all about your next investment. You can make it all back. If you did great, you can lose it all. Like, it's stock market investing, it's a day-to-day thing, guys. So don't focus so much on what you've done or haven't done in the past. The things I talk about on this channel, I never think about those things in real life, like, getting 30 to 40% gains per year. I never think about that in real life. I only talk about it because it gives some reference to this channel. The 2015, when I lost $75,000 stock market trading on margin, I lost my wife another $25K. We lost $100K combined. I never think about that in real life. I talk about it on this channel from time to time because it's important to the channel. But that type of stuff, I never pay attention to in real life. It doesn't matter to me. It's not relevant. It's not relevant. All that matters is what's going on now and what's going on in the future. That's all that matters. Just because I got great gains in the past doesn't mean I'm going to get great gains in the future. Just because I had a bad year doesn't mean I'm going to have a bad year again. So whatever, just push everything that's happened in the past behind you, guys. Stuff's going to happen. You just got to push it behind you. Don't think about it. Just a lot of people just keep thinking about it again and again, and it psychs them out and it frustrates them or whatever. Oh, I did so bad and I'm just going to keep doing bad. You just got to get those thoughts out of you, and that's not just a stock market rule. Like, that's a life rule at the end of the day. You just got to forget about the past and move on. Coming in at number 9 is do dividend research. So if you're going to invest in dividend stocks, right? A lot of people like to invest in dividend stocks. I say at least 50% of investors out there will not even mess with the stock unless it pays a dividend. Why this is, I don't know. A lot of people just like to collect those dividends. Make sure you're doing the research on those dividends on the back end. So if they pay a 6% yield, make sure they actually have the net income coming in to pay that 6% yield. How is that net income trending? Is it going down and down so they'll end up cutting the dividend? Because once again, just because they paid a dividend in the past at a certain rate does not mean that company is obligated or will pay that dividend in the future. Okay? So just because they paid a $1 dividend last year does not mean they're going to pay a $1 dividend this year. They're not required to do that. They can cut that dividend at any time. The board of directors can cut that dividend at any time. So you have got to keep this in mind when thinking about investing in dividend companies, guys. I see so many people, they just throw money because, oh, this stock gets an 8% yield. Well, this stock gets a 12% yield. Let me throw some money at that. And they didn't even do the research on the back end. What's that net income doing? What's that balance sheet look like? How's the business trending? What, where are they getting that money from? Are they just taking out debt to pay out those dividends? What are they doing there? Do the research on the back end, guys, when you're trying to invest in these dividend stocks. Pay attention to that. Number 8 rule to pay attention to is run your own race, and don't chase gains. So run your own race. What somebody else is doing is irrelevant to you as a stock market investor. It's irrelevant. It's absolutely irrelevant, guys. When I ran track, whatever Usain Bolt was running for times, that's irrelevant to me. I'm not going to run Usain Bolt times. I need to focus on my own race. I need to focus on myself getting better each and every day. Each one of you guys out there, focus on your own race. Don't get caught up into what I'm doing. Don't get caught up into the gains you see some guy on TV or some other person getting. Like, pay attention to your own race. And just because you're doing better than somebody else doesn't mean you're a great investor. You just got to pay attention to your own race. Just because you're doing worse than somebody else, who knows, maybe that other person's the best in the world at that and you're coming in number 2. Like, what's so sad about that? Focus on your own race, get your own gains, focus on yourself getting better each and every day. Don't focus on the other guy, what the other guy's doing. That's just going to frustrate you and put you in a negative mindset, because What'll happen is you'll find people that will do better than you, and then you'll just get mad. Why are they doing better than me? And things like that will frustrate you guys. And then you might just start changing your style, just copying whatever stocks they're buying. That's a really bad no-no there. That's a really bad no-no there, guys. So don't chase gains. Just run your own race at the end of the day. The number 7 top stock market rule out there is decisions will try to haunt you. Decisions will try to haunt you. Don't let them haunt you. I'll give you an example of this. I've had this happen to me many times. When I went into a stock and I either went too heavy right off the bat as far as putting in too much money toward that stock or not enough money and it shoots up super high. You know, for instance, when I invested in Michael Kors, it was probably over a month ago now, that stock shot up 25% in like a week since I owned it. And at the time I was like, dang man, why didn't I stick some more money in that? Why did I only stick that little amount of money in it? That was like small money. I should have stuck big money in that one. And that will kind of creep in sometimes. Don't let that creep in and don't let that bother you, especially don't let it bother you long term. With these decisions where you go too heavy in a stock right off the bat and it goes down, you're like, why did I go so heavy on that one? Or you don't go heavy enough and the stock shoots up. Like, don't let these decisions haunt you. Same thing with other bad decisions, like you just picked the wrong stock or something. Don't let that haunt you. Move on. This kind of goes back to number 10. Like, yesterday doesn't matter. Just move on, man. You just got to move on. If you did a great stock, move on. Like, don't just let that haunt you, you know, for better or for worse at the end of the day. Number 6 here, guys. Number 6. If you play on the edge of the Grand Canyon long enough, you're going to fall in eventually. Okay? So pay attention to the balance sheet. Too many people out there in the stock market land, they love to invest in stocks without even ever looking at the balance sheet. Never mind really looking at it closely, but they don't even look at it in general. They'll invest in a stock and they've never even looked at the balance sheet. That's a horrible decision, guys. That's the expression I use there. It's a great one. You play on the edge of the Grand Canyon long enough, you eventually will fall in. And that will eventually happen to you if you invest in enough bad balance sheet companies. Eventually you're going to pick the wrong one and eventually you're going to go down with that company because you never really researched the balance sheet. You never really looked at the cash and investment. You never looked at the stuff I talk about in my 11-part stock market course, linked in that description there. You don't look at that stuff. You don't look at that stuff, guys, it's gonna come back and bite you. I guarantee it, especially if you're investing for the next, 2, 3, 4 decades, guys. It will 100% come back to you if you're not paying attention to that balance sheet. It comes back to everybody. Number 5, compounding. Compounding is the sickest thing ever. Self-explanatory. If you've ever played around with a compounding calculator, it's unbelievable, guys. Pay attention to this. Like one of the first things, if there was a new investor, if I was like an actual mentor of investors, which I'm not, but if I was an actual like mentor and I did like one-on-one training, like the first thing I would have people do on the very first day probably is play around with the compounding calculator. So just see what if you put in 10,000, you get a 10% gain on that per year over the next 20 years, like what that adds up to. Not a lot of people even realize like the compounding effect and how much compounding numbers and how it's a true snowball avalanche effect where it just gets bigger and bigger and it just keeps picking up more and more. It is amazing, guys. So one of the biggest rules out there, like pay attention to a compounding calculator, play around with it if you never have before, and it'll open up your mind to how big numbers can really get once you get the ball rolling, guys. And it'll let you focus a little more long-term than short-term, because short-term, you can kind of think, well, I only got $10,000. If we get a 10% gain, it's only $1,000. You need to really be thinking about a 10, 20, 30 years from now, what that's going to be adding up to as long as you get that 10% gain per year. So that's one of the biggest rules. I would have everybody look at a compounding calculator. Number four, stock market investing is cumulative. The younger you start, the better off you'll be. So as a rule, you just want to start younger. Like, I don't care. You only got $100, you only got $500. Like, you need to start younger, the better you get into the stock market. All the stuff you're going to learn over time is just going to help you make better and better decisions over time. I look back at some past investments I made when I was in my first year or two investing, and I'm like, that was a dumb investment. Why was I in that stock? That was crap. Like, I shouldn't have been in this one. I should have been in this one and this one. Why did I not see this company coming? You're just going to learn a lot of information that's going to be very valuable to you. You're just going to get better. It's like anything in life, guys. The more you practice at it, the better you get. You practice, 3-pointers all day out on the basketball court. You're going to get pretty freaking good after about a month of doing that if you're going out there every day, guys. Same thing with stock market investing. You're doing this day in, day out. You're going to get better and better and better and better. better. It's just natural. You're just going to get better. Sometimes people see like Warren Buffett, like he doesn't get as good at gains as he used to get when he was in his, let's say 30s, 40s, 50s, and now he's in his 80s. Shouldn't he be getting better gains? The reason someone like Warren Buffett doesn't get better gains is because he has so much money he has to invest that the amount of companies he can even go into is like really, really small now, guys. The amount of companies he can go into, because he's trying to invest tens of billions of dollars usually, the amount of companies you can even invest that much is super small. So if Buffett was still working with little money, he would be killing his gains. I guarantee it, even though he's still a little old-fashioned. I guarantee you he would be killing what he used to get back in the day, just because he's been around the game a lot longer. He knows how it's played a lot better, guys. So definitely, remember all this information is cumulative. Number three, don't throw money at random stocks. Why do people throw money at random stocks? Just somebody they hear on TV or whatever, they just throw money at a random stock. Like, that blows my mind. You need to be disciplined when you're stock market investing. You can't just throw money at stocks. You can't, this stock, so-and-so, my dad said, buy this one, so I just threw, $5,000 at it. Jeremy, he said he's buying such and such stock right now, so I should buy that one. Let me throw some money on that. Absolutely idiotic. Never ever do that, guys. Never ever do that. Make sure you're making your own decisions. If Bill Belichick, the Patriots coach, would he ever just start calling random plays? My mom, she said I should run a flea flicker with Tom Brady today. Let's do that. Like, no, you don't when you're disciplined and you're great at something, you don't just do stuff to do stuff. You don't just throw money around. Absolutely not. Your decisions are disciplined. They're disciplined. You don't just throw money around, guys. That's absolutely idiotic. And so don't do that ever. Don't just throw money around. It's going to come back to bite you. I guarantee you that. Number two, every war is won before it's ever fought. Every war is won before it's ever fought, guys. Research is key. Research is key. You gotta be willing to put in the research work. You gotta be willing to put in the research work to all this stuff. You gotta be willing to look at all those reports. You gotta be willing to look at all the news. If you're not really about the action, it's not for you, man. Just stick your money in an index fund or something like that. If you're not about the action, it's not for you, okay? I want to make that very clear to everybody out there. You're not about the action, it's not for you. You need to pay attention to everything. You want to always succeed with your stock market investing, or at least 99% of the time. You need to make sure you're doing a massive amount of research on the backside before you ever stick $1 in that company. You do that, you stick to a disciplined game plan, 99+% of the time, you're going to do absolutely phenomenal over the long term. You don't do that, and you might as well be gambling at the end of the day, because that's exactly what you're doing. If you're not putting in the research work, if you're not sticking to a disciplined game plan, you're gambling. You're gambling. Let's make that very clear. You're gambling at that point. You might as well go play some craps on the strip or something like that, because that's exactly what you're doing if you're not putting in that research work on the back end, guys. So let's make that very clear. Always put in the work. Always put in the work. The war is won before you ever even put that money into that stock, okay? Let's make that very clear. And number one rule of stock market investing is preservation of capital is critical, okay? It's not just great to get great gains. Let's all get great gains. That's phenomenal. But at the same time, losing money is huge. Like when I took my loss in 2015, because I started stock market gambling, that was so stupid. And that was a massive amount of money I lost there. And that's a lot of capital I lost. Huge mistake. That was the number one mistake I made in 2015. Number one mistake out there, in my opinion, in stock market rules. I made that in 2015. Huge mistake. You got to keep your capital around. You cannot take huge risks. You cannot start gambling that money around. You got to always stick to the disciplined game plan. When I went away from it in 2015, when I went away from everything that made me successful in 2015, I got bit in the ass, and it came in and it was really hard, and it was not pleasant, guys. So make sure you always remember, it's not just about the gains. The gains are great, but also remember, it's also about the safety. You want to always, not go too crazy in some stocks and things like that. You don't want to ever go undisciplined, because you lose a lot of capital, it's going to come back to bite you. And remember, we talked about compounding calculator, we talked about compounding numbers. You lose 75,000. All of a sudden, those compounding numbers get way less and way less, and you got to build for several years to even get back to that place, guys. It's painful. It's painful. So I hope you absolutely enjoyed this today. Top 10 stock market rules for everybody out there. Don't forget, if you haven't checked out my 11-part stock market investing mastery course, make sure you check that out. It's the first thing linked in that description. Thank you for watching, guys, and have a great day.